Welcome to Financial Table Lessons. Listen up. Think about the thousands of hours we spent in school. We can calculate the area of a circle and tell you who won a war in 1812. But most of us are never taught the psychology of money. We're prepared for tests, but we aren't prepared for life. It's frustrating to have a great education and still feel stuck when it comes to building a future. But when it comes to making your money work for you, silence. Now, full disclosure, I'm not a financial advisor, but this is an observation. I have spent years wondering why the strategies that actually move the needle were never part of the conversation. Today, I'm pulling back the curtain on the investment approaches that should have been taught in every classroom, but somehow stayed prohibited. School prepares you for a job, not for financial freedom. We're taught how to work for money, but never how to make that money work for us. It's a completely different mindset. And here's the kicker. The strategies for growing wealth aren't even that complex. They're invisible to anyone who hasn't been shown where to look. We're taught to solve for X in a triangle, but we're never taught how to solve for financial freedom. Schools ignore the eighth wonder of the world, compound interest, leaving us to figure it out on our own. Most of us fall into the same trap: get a paycheck, pay the rent, and let our savings rot in a bank account, earning next to nothing, praying that we'll somehow wake up wealthy one day. Spoiler alert, hope isn't a strategy. If you feel like you're working hard but getting nowhere, stop blaming your worth. The problem isn't your effort. It's your blueprint. Nobody ever explained that building wealth and earning a salary are two completely different skills. You can be the highest earner in the room and still be broke if you don't understand the fundamental mistake we're about to discuss. Most people treat investing like a secret club they aren't invited to. They wait for the perfect moment to understand every chart and graph before they dive in. But while they're waiting, their most valuable asset, time, is disappearing. In the world of wealth, being early beats being smart every single time. Imagine two friends. One starts small with $270 a month at 27. The other waits until they feel established at 37 and starts putting in $470 a month. Despite the bigger monthly checks from the late starter, the one who started early walks away with the bigger fortune at 65. It's a perfect example of how time is more valuable than the amount you invest. We're often paralyzed by the fear of making a mistake. But the biggest mistake is actually choosing immediate comfort over the security of your future self. So, what's the strategy that was missing from your textbook? Strategy 1. Stop looking for the needle. Just buy the whole haystack. This is called index fund investing. Instead of stressing yourself out trying to guess which company is the next Apple, you buy a single fund that instantly gives you ownership in hundreds or even thousands of companies at once. By investing in the S&P 500, you own a piece of the top 500 giants. Historically, this index averages a 10% annual return. It's not a straight line. Markets go up and down, but the long-term trend is up. Let's run the numbers. $270 a month. Start at age 27. By 67, you're sitting on $1.77 million. You did the easy part, contributing roughly $129,600. The market did the heavy lifting, generating over $1,640,400 million in pure compound interest. That is your money working harder than you ever could. Uncle Sam wants a piece of your wealth, unless you use strategy 2, tax shelters. In a Roth IRA, your money grows tax-free forever. You invest post-tax dollars now to enjoy a tax-free fortune later. Don't let taxes eat your retirement and the 401k match. That is the only free lunch in finance. Take it. Strategy 3 is about playing offense and defense. Wealthy people view their paycheck as a tool, not a toy. They pay themselves first. When you're young, play offense by the market and let it ride. As you age, switch to defense bonds and stable assets. Here is the shift that makes it work. Don't obsess over getting rich. Focus on buying your time back. That's what wealth actually looks like. Investing runs a machine that works while you sleep. Imagine checking and seeing $1,700 in dividends deposited while drinking coffee. That is the definition of financial success. It's hard to stay motivated when you can't see the finish line. Most of us look at that monthly investment and feel like it's a drop in the ocean. That's the psychological barrier we want to pay off now. Since we were never taught to visualize our future selves, we walk away from the strategy too early. We expect a forest after 1 year of planting, but wealth is a long-term game. You have to trust the math, even when you can't see the results yet. It's time to move from theory to reality. No fluff, just action. Step 1 is grabbing your phone and opening an IRA. Whether it's SoFi, Invest, E-Trade, or Fidelity, the goal is the same. Don't get stuck in analysis paralysis over the interface. They all give you access to the same wealth-building tools. 20 minutes of setup time today is what will secure your next 40 years. Think of this as your autopilot mode. A target date fund adjusts your risk levels automatically as the years pass, so you never have to stress about it. An S&P 500 fund gives you a slice of the top 500 companies at a rock-bottom price. You don't need a portfolio of 20 different stocks. Think of automation as a gift to your future self. By setting up an automatic transfer, you stop making a decision every month and start building a habit. Don't let the search for perfection paralyze you. Perfection is the enemy of progress. You don't need to be an expert to start. You just need to be a participant. Small amounts aren't insignificant, they are seeds. And as those seeds grow, so will your confidence. Stop overanalyzing and start acting. Building wealth isn't about getting lucky, perfectly timing the market, or discovering some hidden investment trick. It comes down to knowing which strategies truly stand the test of time. Things like investing in index funds, using tax-advantaged accounts, letting compound interest do its thing, and having the consistency to stick with the plan, even when progress feels slow. Most schools never covered this because the system was built to prepare people for jobs, not for building wealth. But your financial future isn't limited by what you were or weren't taught. You can learn these principles now, start applying them immediately, and completely shift where you're headed financially. This is a long-term journey. There aren't any real shortcuts, but the confidence and calm that come from knowing your money is steadily growing behind the scenes. Setting you up for genuine financial freedom down the road is far more valuable than quick, temporary wins. You don't have to already be wealthy to begin investing. You begin investing so you can become wealthy. Tiny steps, taken consistently, add up to meaningful wealth over time. That's not motivational fluff. It's simply what happens when steady effort meets the power of time and compounding. Think wealth building. Thanks for watching. Until the next video.